Hey everyone, welcome to the Quintin Group.tv. Welcome back. Today we're going to talk about 1031 tax deferred exchanges. Hey everyone, yes, I'm your host Jeff Quintin. So 1031 tax deferred exchanges, just a few things you need to know. When you're selling a home and there's a capital gains involved, meaning that there's a profit involved. If you bought a home, say for $500,000, you're selling it today for $700,000. The difference between the two, between what you bought it for, what you're selling it for, minus all the fees and so forth, is your net profit. That's your capital gain. You'll be subject to paying capital gains tax. Now, how to avoid capital gains tax? There's a couple ways to do it. One is you can do what we call as a 1031 tax deferred exchange. The basic rules of the 1031 says that you have to sell a property of equal to or greater, when you're selling a property, you have to buy another property of equal to or greater than the one you're selling. So if you sold a home, let's say for $700,000, you buy another one, say for $700,000 of equal that value or greater, you could defer all of the gain from the previous purchase and profit into the next home. So if you bought a home for $500,000, let's say that you were selling it, say, and netting $700,000, the $200,000 gain, you could take the $200,000 gain that you have, which you normally would pay capital gains tax on. You buy another home of $700,000 or greater, you defer all that amount into the next house. Now, to avoid all the capital gains tax, one, you have to buy other property or properties of equal value or greater, one. Number two, you have to do all of this within 180 days after you close. So if you're going to close on a home, let's say February 15th, 2022, you have 180 days or say 6 months to make all this happen. You got to close on the next property within, say, 180 days. Now, during that 180 days, you have 45 days from the day that you close to identify up to 3 properties that you're going to purchase. So you've got to close on the property, let's say February 15th, identify 3 properties within 45 days, call that through, say, March 31st. And then one of those 3 that you identify, you must close on within 180 days of the day that you closed. So if you do all of that and follow these rules, again, buying another property or properties of equal to or greater than the one you're selling, you'll be able to take all of the gain that you have, defer it into the next property, right? And do that all within that 180 days. You will not pay any capital gains at all. So if you're thinking about looking for another additional investment property, if you're looking to sell one, defer your gain, whatever it may be, feel free to reach out to me direct or my team at 609-398-5333, or you can email me directly, jeff@thequintingroup.com. Thanks for watching.